So, are funded traded accounts a giant Ponzi scheme? Welcome to your Traders Clinic, your regular shot in the arm of trader insights, philosophy and knowledge, brought to you by two professional money managers, Ali Crooks and Charlie Burton.
Each week we answer your burning questions and discuss all things from the world of trading. So this week we've got a special for you. We've had a lot of questions and we keep getting regular questions about this, what we would call, I think, a hot topic currently in trading. So we're going to spend the whole show talking about funded trading accounts, but we're going to start it off essentially with this idea that are they a giant Ponzi scheme, and should it be something that you pay attention to, or should it be something you ignore?
Yeah. Well, what we're going to do is we're going to offer a balanced view throughout this special episode. So we're going to talk about the pros and obviously the cons as well. Yeah. I was in an office here in the city last week, and it was put to me by a professional that funded traded accounts, and this is a professional in the industry, are essentially a giant Ponzi scheme. And when you actually break it down and think about it, these funded accounts, they're not real accounts. So you're trading on a demo account, and a lot of these companies, whereas a couple of years or so ago, they sort of made it out that it was a real account, whereas most of them are now actually even saying to their customers, yeah, you're on a demo account, but we're going to pay you out, doesn't matter, we're going to pay you out anyway if you make X percent, whatever. So in order to have those few, and it is a few percent who make it through the challenge, so there's a challenge phase, which is what is making these companies their money. Let's just break it down. They're making their money through people applying for the challenges and collecting those fees. So of the people that do the challenge, a smaller percentage actually make it through, and an even smaller percentage actually manage to continue, because you might get through, but then you fail after a month or whatever after getting through, and then you have to start the whole thing again if you hit your drawdown limit. So they're collecting all this money here, and they're collecting a load of money here. So it's only a relative small amount of traders that they're actually having to pay out on, who have got through and are then making money. So they just use this big pot of money here to pay out those people there. So it needs more and more people coming in, new challenge fees coming in order for them to be able to continue their entire business model, to be able to pay out those few, in relative terms, who actually are making money over here. Essentially, that is a Ponzi. And so, because it requires more and more people to come in to feed the beast. So providing there's more people coming in, it will continue. But you do wonder, at what point are the regulators going to get involved with this and look at what's going on, saying, they're selling the dream here a little bit. There's a lot of people thinking, this is my way out. I'm going to have 100K, 250K to trade with. They're not 250K, it's a demo account. But does that really matter if you've got 250K demo, but you're still getting paid out as if it's real money?
Well, that's the big question. So I think the key thing there is that essentially what you said is it's reliant on the money coming in. I mean, it's the casino model. We've discussed this before. So it's heavily reliant on people coming through the door.
Yep.
And in terms of, I think, where we are in the process of it, we're probably in phase 2. So phase 1 was a couple of initial companies that were doing it. We won't mention any names. They were, like you said, phrasing it in a way where you would read the literature and presume you were going to suddenly have access to all this money. And as we've said before, if a trader came to you and said they'd made 10% in 1 month, would you give them £100,000 of money? The answer is no. But they were preying on that initial group of people that would throw money at anything. So the wording was very heavily greed orientated and written in that way. And they were making a lot of money, like you said, on this huge amount of fees, or huge amount of number of fees that were coming in. I think now we're moving into phase 2, where you're seeing more companies getting involved in this, jumping on the bandwagon. So what you're seeing is a little bit of competition. So as a result of that, you're seeing a change in what some of the criteria are for people to meet. But the challenge there is, if you link that back to what you've just said, well, if you've got more companies, that means there aren't there isn't one company getting all the money comes through. So they're now fighting, if the pot's the same, the amount of people, they're fighting for that same amount of money distributed across different ones. So yes, it's slightly better for the potential client now because they've got more choice, but there's more competition. So it could be that certain companies start up and then disappear. So even from a business point of view, I think you've got to be very wary. So it's the same thing. They're all reliant on the money coming in through the front door to be able to pay you on the back end of it.
I was speaking to one of the brokers who provide the platform to a lot of not all, but to a number of funded accounts. So they basically create a white label. You or I, with our sort of followings, in theory, could create a funded account company.
Yeah.
And I could go to that broker and off the shelf, they'd say, right, Charlie Burton, there you go, branded, there you go. You can now market it to your following and your customers or whatever. And even they said, this was in a call just a couple of months ago, yeah, we don't know how long this industry is going to last in the long term. Yeah. And they're because they're just because they still need to, even if you're on a demo account, you still need to have access to all that data. So this broker is providing all of that, and they've got all the systems to create all of this stuff for you. But you need to be marketing a lot. You need to have a lot of people coming in. So you're absolutely right. The industry is rapidly shaping and reshaping all of the time at the moment. So we're going to get on to the benefits of this in a minute, but there's a few more. The negatives.
Well, and it's I suppose the phase 3 would potentially be, and we've talked about this before, and something that I think I would like to see is some sort of regulation around this. So a normal broker has to clearly define the number of traders that are successful and the number of traders that are losing money. So something like that, I think, would be really important if it was to continue. But the challenge around that is, like you said, you brought up the thing about demo accounts. Well, if you were to take your standard broker account and then you were to trade exactly the same way alongside, we've spoken to people who've been involved in this, and the spreads widen excessively, they widen more often. There's a lot of things. If you traded exactly the same way, your results would not be the same in one of these funded accounts as they would with a fully regulated broker.
I think it comes back down to go in with your eyes wide open. I think there's a lot of people, and yeah, I understand people might only be 6 months into their trading and they're still quite green in a way, but you have to be realistic with expectations. And even if you open 2 separate brokerage accounts, genuine brokerage accounts, and you traded exactly the same approach, bought on both of them at the same time and sold, or put your orders in and sold at the same time, you will see a difference in your performance on both accounts. Because I trade on 6 different accounts across a number of different brokers, likewise with yourself. And you do see it, don't you?
Yeah.
Now, sometimes you just get stopped out on one and the other one doesn't. And then the other one goes off and makes, 3R, and the other one's had a 1R loss or whatever. So all of a sudden you've got a big difference between the two. And that's just between genuine brokerages. And like you say, I was speaking to someone who actually works for one of these funded account programs, and this lady said, you have to be a bit careful because she trades with them, should I say, because they will widen spreads a little bit more around news or over weekends as well, and so it can catch you at times. So are you going to get an exact same performance that you would get with a broker? I would argue no.
And I think when you said about eyes wide open, it links back to, well, if you come into this thinking, well, hang on a minute, yes, they're running a business. So the chances are that you've perked up, or like the idea of this you mentioned being 6 months in. Well, a trader is, all things being equal, a trader 6 months in is going to be way more naive than a trader 6 years in. Yeah. So they're far more likely to be impacted by greed. So they're not looking at it necessarily in an objective way. Well, think, like you said, if they're reliant on the money coming in, they're also incentivized to do as much as they possibly can not to pay you out. They need some people to be successful. Yes. Otherwise, well, why would you bother signing up in the first place? But you don't want too many people being successful. No. So they've even changed, you were telling me earlier, they've even changed the way that they operate. We're now seeing We're now seeing them offering bigger timelines so that but again, they're only offering that because the industry is becoming more competitive. If they could get away with a minimum amount of people qualifying, then they're going to do that because they need to make more money. And I think you mentioned something very much about the roulette, the scenario that's there.
I was reading a book recently about these guys who were so good at beating the system, the casino system, that we had some of these mathematicians, basically, and engineers who figured out, this is going back a reasonable amount of time now, how to win at roulette and put the odds in their favour. And it all came down to, they would look at the angle that different casinos would have the roulette wheel at, because that would affect the spin rates and all these sorts of things. It was very in-depth. But in the end, because these guys were going around the world and taking money off the casinos regularly, then the casinos had to do something in order to, and they did actually get together. They all sort of got together under their own industry, and they added a blank space, one blank space in the roulette wheel, and just by adding that one blank space, which meant nothing. So it meant that, if your ball landed in there, you got nothing. Just by doing that on the entire wheel meant that they massively swung the odds back in their favour away from these guys who had this great system. So it's the same sort of thing as we're talking about here, that they only need to widen those spreads. They won't do it all the time. No. They only need to do it now and again, and that will massively swing it back in their favour. As you say, they need people to be paying out. That's good for them. They can put it on their marketing and all of that. And so they do need people that they're paying out, but they can't have 100% of their people coming in paying out. Yeah. They wouldn't have a business. Exactly. So just have your eyes wide open that you are trading in something which is geared against you to a large extent. Even if they want you to make some money, they're not going to want you making money forever and taking them for millions.
And even if the marketing now is they're becoming more open, they're saying you don't have to qualify, you don't have to make your 10% in 3 minutes, you've got a whole 6 months. They're going to, if they're giving you more flexibility there because the industry is becoming more competitive, they will find a way to make it more difficult somewhere else, just like a casino would. They will add add that one little square. So these guys have got huge amounts of time, energy, and resources to make sure that they're running their business correctly. So, like you said, if your eyes are wide open, and I think that leads on to, okay, great. So if I've got my eyes wide open, yes, I understand the system. How does it then work if it's something you want to do?
Yeah. Oh, okay.
Well, I can go if you want. I think that the thing that I always come back to is that with trading in general, if you come at trading, regardless of funded accounts, if you come in it from the point of view of I'm looking for a paycheck, as in I'm looking for the same % return every single month, then you're probably going to end up disappointed because results don't work that way. You might have an average of 2% a month, but the fluctuation will be there month by month. You won't hit that necessarily every single month. You'll be above it, you'll be below it. So it's the same with this. If you come into this thinking, this is my way out, I can now get myself a paycheck and now I can quit my job and earn whatever, £2,000, £3,000, £5,000 a month from this scheme, you're already in the wrong place. Because the way I would be looking at it is saying, okay, if I'm going to get paid out, then this money I should be adding into my trading account, because there's no better way than having your own money. So don't rely on this as a paycheck, and look at it that if you do manage to hit certain milestones within the program, take the money out and have it as a bonus. Don't rely on that money as a way to fund your lifestyle, essentially.
Well, you and I have both got traders we know who are doing it that way, with that mindset, saying, well, I'm just using it because I'm trading my own account anyway.
Yep.
And I'm using this funded account. If I do make any profits out of that, then I'll scoop those out, and that helps top up my proper trading account, if you will.
Yes.
And we were talking over a coffee earlier on, and I was saying that the funded account programs are getting sneaky. So that what they do, I say it's good in some regards, but it's again another way of them getting you to not withdraw your money, because they're saying if you leave your profits in, then we'll allow you to have a larger drawdown. So rather than it only being, let's say, 5%, we can move it to 6% and then to 7%. So if you keep your profits in there, then we'll give you a bigger, which makes sense, because giving yourself a bit more room on potential drawdowns is a good thing.
Yeah.
But again, they're not having to pay you out, are they?
Yeah.
And you're using your profits in order to fund a larger drawdown feature. So you're still not taking your money out. So they just got you. They just got you staying in the system. That's what they want. But again, coming to the positives, if you do take it that way, like you've just said, and just say, right, I've got a genuine account here, which will perform better. It should do because of all the things we've already said. And this one over here, if I do just plod away with it and it makes a bit of money here and there, rather than seeing that as the holy grail that's going to enable you to quit your job and all the other things that people think, and I'll just use any profits I do periodically make from that and feed my main account, but still have wide eyes open on that.
I think that's the key message today. Is keep your eyes wide open, understand that they're incentivized to make money for themselves rather than,
it's not an instead of. It should be as well as having a genuine brokerage account, because that's where your true wealth will come from.
Great.
Yeah. Are we done?
We done. That's the episode done.
Yeah, I think I've really enjoyed talking about this subject today, because we get it a lot, and it's so prevalent with traders. And I understand that the average trader doesn't necessarily have a huge amount of capital, and it sort of, in theory, gives them that access to a larger account, even though they're not real. But it's, if they make the profits on 100K, they might make a few grand or whatever. So it's just such a popular subject. So I'm pleased that we've delved into it and hopefully given people some food for thought on the various things that happen and all that.
Yep, it's been good.
Yes.
Wonderful.
That's it from us for this particular episode. Trade safely out there.